For decades, Modinagar was known as a quiet industrial outpost. Today, you see construction cranes and rapid urban development taking over the landscape. The main engine behind this rapid growth is the Namo Bharat RRTS corridor. Alongside the rail system, the Delhi-Meerut Expressway has drastically improved road access. These two transit routes mean you can now travel from Modinagar to major employment hubs in Delhi and Noida in a fraction of the time it took 5 years ago. Right now, properties in this corridor are available in the 20 to 60 lakh rupee range, making it highly accessible compared to inner NCR. To capture those prices, you have to be willing to lock up your capital in a developing market that is still building out its local infrastructure, rather than buying into a fully mature neighborhood. With appreciation in this corridor effectively baked into the infrastructure, your success depends on selecting the specific physical asset that matches your financial capacity. You are looking at a choice between purchasing a raw, GDA-approved plot of land or a ready-to-move 3 BHK flat. That single decision dictates exactly how long you will need to hold the asset before seeing a return. It determines the specific types of risk you take on while owning the property, and it defines the timeline and the mechanics of your financial yield. There is no objective winner between the two. The best choice is the one that fits your current cash flow. Success in this market comes from dissecting the hidden costs of both options, allowing you to match the physical property to your own specific financial constraints. Let's start with the plot strategy. This path is built specifically for the long-term capital optimizer. This chart tracks 10-year asset appreciation. Raw land consistently rises at a steeper angle with a higher ceiling than constructed property. The reason is zero depreciation. Dirt avoids wear and tear and never needs renovation to maintain its value. Holding that land early on is cheap. Before construction begins, you aren't paying monthly maintenance charges or complicated utility bills, but you are trading away short-term gains. Raw land produces exactly zero immediate rental yield. You also take on a security burden. An undeveloped plot requires constant vigilance to ensure it stays free from illegal encroachment. And eventually, you face a major liability. Turning that plot into a home will demand heavy, out-of-pocket capital and months of your time to manage construction. Even buying the land requires more cash up front. Banks enforce stricter eligibility criteria and demand higher down payments for plot loans compared to standard home financing. A GDA-approved plot maximizes your long-term wealth generation, but it aggressively penalizes any investor who needs short-term liquidity or relies on immediate cash flow to stay afloat. If that strict timeline doesn't fit your life, the ready-to-move 3 BHK flat is designed for the yield-seeking or lifestyle buyer. Looking at this monthly cash flow chart, the immediate advantage becomes clear. A finished flat is livable on day one, meaning it instantly generates a steady rental income. That rental yield directly attacks your largest liability, effectively neutralizing the monthly bank EMI. It also delivers immediate utility. Modern flats located in premium townships give you built-in access to clubhouses, gyms, and reliable power backup. The security burden is completely handled for you, with managed entry gates and a defined populated community environment. Financing is highly accessible. Banks favor the established nature of a finished flat, offering standard home loans with lower down payments and attractive interest rates. But there is a ceiling on your upside. The physical building structure depreciates year over year, which drags down the overall appreciation rate compared to raw land. You are also locking in a permanent expense. As long as you own the flat, you must pay mandatory recurring maintenance charges to the Residents' Welfare Association. Flats offer safety, immediate utility, and vital cash flow. The trade-off is sacrificing maximum unrestricted appreciation and accepting permanent recurrent fees. Because of Modinagar's strategic RRTS connectivity, both the plot and the flat have a strong baseline for growth. To make the correct choice, we can use this decision matrix to align the asset with your personal constraints. Start with the most critical filter. Do you need immediate cash flow to help offset your monthly EMI? If the answer is yes, the analysis stops right here. A 3 BHK flat is the only viable option. If you can survive without rental income, ask yourself, is your investment horizon strictly longer than 5 to 10 years? If you plan to sell sooner, you need the liquidity of a flat. If your timeline stretches beyond a decade, you move to the final test. Are you prepared to manage future construction headaches and accept strict bank financing limits today? If you have the capital and the patience to answer yes, you are a true capital optimizer. Your path is a GDA-approved plot. Review your personal risk appetite and cash flow tolerance before buying into the Modinagar boom. Match your finances to the right physical asset, and you will be positioned perfectly to capitalize on this growth.